Alright guys, weekly watch list video for the week of February 14th, and the title of this video is Short Everything. That's kind of how I'm seeing things right now, so we are still working on my indicators here. My buy and my sell signals. They should be good to go probably by September. So that's going to be a work in progress here for the next 6 or so months. However, we kind of got the beta version here on the charts. And keep in mind, this is just kind of based on my criteria. This kind of keeps the guesswork out of it. If I have buy signals, then it's bullish. If I got sell signals, it's bearish. So from that perspective, if you look at the S&P 500 here, I've got sell signals. A red arrow or a pink arrow pointing down south is a sell signal. So I got sell signals on the S&P 500. Got them on the Qs. And we've had them here on the Qs basically since early January. If you check out the small caps here, and we started short in these small craps last week. These have had sell signals since basically like Thanksgiving. And the Dow Jones here, even the Dowski has got some sell signals. So, 4 major indexes there, in my opinion, they've got a shortable structure. And then if we go kind of sector to sector, XLK, sell signals, the industrials, sell signals, utilities, XLU, you got sell signals there on the transports and on real estate and in healthcare, basically everywhere besides energy and the financials. And there's your semiconductors. It's all looking pretty ugly here, my friends. So energy, energy and oil names, and if you look at oil here, this is one of your kind of last men standing as far as a good trend goes. Just keep this in mind. And we've been playing a few of these setups. So, in the Mastery, we traded Devon, bought some 50 strike calls back here, took them on the pop, and we bought some calls last week in the Mastery. So there's still great structure in this group. There's Devon, LNG looks really good, FANG looks really good, EOG closes basically at all-time highs. Just keep this in mind, because you got good structure here. It's a little bit late stage, meaning if you look at the weekly chart of either XLE or oil, CL here, this trend is a little bit late stage. Meaning I think the easy move is when you're pushing off that weekly 21 into the upside. So there's the easy move. There's the easy move. It doesn't mean, okay, we're about to pull back here. It's just from my perspective as a swing trader, that's kind of the easy part of the move. So you could trade higher at this point, but just at least go into any longs here with the understanding that you're kind of fighting that growing probability. That as good as it looks here, and it does look pretty good, at some point you're going to get a reversion back to the weekly 21. So a little bit late stage here. But there is good structure and energy. So the other group here are your financials. And I think heading into this week, my primary focus is certainly going to be to short the market, which we'll talk about here in a second. But these frisky financials, not too bad. Not too bad. And with interest rates set to rise here, the banks might benefit. But you do have a nice daily squeeze here in XLF. So I think names like Wells Fargo, I take that back at the 21. You got Chuck Schwab here. Pretty good looking daily squeeze. And then you got old Uncle Warren with Berkshire. So I think BRK/B, Wells Fargo, Schwab, they look pretty good here. But dominantly, the indexes, most of the sectors, and then my scan results, it's all a little bit bearish on this end. So let me just move the screen here real quick. So in terms of just like running a scan here for daily squeezes, so no bullish criteria, no bearish criteria, just show me 100 or so daily squeezes. If we sort that scan by market cap, there's more sell signals than buy signals. So there's Microsoft. Procter & Gamble has neither. You probably, just based on the shift of structure here, get sell signals pretty soon. Home Depot sell. Coca-Cola's pretty good. Pepsi's kind of breaking down a bit. Eli Lilly's got sell signals, Adobe, there's Nike, there's Comcast, which we shorted Comcast last week, ACN, there's Salesforce, there is Lowe's. So the point being is, okay, my indexes have sell signals. Most of my sectors have sell signals, and then as I go through the scan here, like 70% of the scan results, they've got sell signals. So kind of leads me to believe the bigger plate of opportunity is going to be to the downside. So in terms of some targets here, in my opinion right now, anything that hasn't already pulled back to the monthly 21 EMA, I think you got some downside coming. So in terms of like your S&P 500, my target here is about 400. And this is just an initial target. I don't think we're going to hold there, but you should get a pretty decent bounce. But you got this big monthly squeeze, releases all that energy. This monthly squeeze basically gave you the trend and the momentum. And now as that squeeze basically dies out here, and we're running out of gas, so to say, it's only kind of normal in terms of the ebbs and flows of a trend to at the very least pull back to your 21. And I think you got more downside after that, but that's kind of the initial target here for the S&P 500. Into March, into April, and it could happen quick here, looking for a move down to 400. And then we'll take it from there. For the QQQ, your monthly 21 EMA is down around 320-ish. Let's get the monthly chart. Right around 320, so that's my initial target. And then for the IWM here, we're already at the monthly 21, but you also have this massive weekly squeeze that's already started to fire short. And keep in mind, your S&P 500 has a weekly squeeze that's starting to shift structure and momentum. You gotta look closely here, but you got a negative histogram. First time the weekly histogram has been negative since like April, May of last year. Oh no, excuse me. April, May of basically COVID. Right, so there's your shift of momentum. Hasn't hit the market yet in a big fashion, but on the weekly chart you haven't had a negative histogram since COVID. So things are a change in here, but keep that in mind as well. IWM is already firing a weekly squeeze short. I think the S&P 500 is heading down that path, and the QQQ, with its first negative histogram since COVID, I think we've got a lot of downside coming. And this is just based on structure. It's based on my indicators. It's got nothing to do with the news or really any of that shit. This is just structure, faux structure. But back to the IWM here. This is starting to look pretty textbook in terms of massive consolidation, basically February to February. And throughout the course of that chop fest, you're putting in pretty good support around 210. So we finally get the break of support. And last week you finally get your first test of support. And it's looking like previous support is now going to be resistance. So we started scaling into a position here last week. What I'm looking for is about a 10% position on an IWM short. But the idea here is this weekly squeeze takes you into about 170. Lines up with your weekly 200 SMA, but you also have a little gap fill. Little baby gap back here. More importantly, there's no support. So if you can break through that recent low, I think our initial target here is about 170. So here's what we did on the IWM last week. And it's bringing in a little bit of premium. So it's off to a pretty good start here. But my thinking is, hey, into March and April, we are going to break through the recent low and trade much lower. So we came on in here and sold an in-the-money call credit spread. Sold the 185 calls and bought the 190. And basically what I'm doing here is looking for this 185 call to eventually end up trading out the money. So it goes from about 25 bucks to like $5. And all that juicy-ass premium coming on into our account here. But more importantly, it's a great risk reward on this trade. So we've got the spread here. Let's see. We sold the spread for $4.27 a credit. So to make the math easy, let's say you have a $100,000 account. Right, $100,000 account, and if you took this given trade with 70 contracts, it's a $5,000 max loss. So in terms of percentages, again, just to make the math easy, you're risking about 5% of your account, max loss. On a push into about 170, you're up about 30 grand. It's like a 30% return. So risking 5% to potentially make 20 to 30% here. Do I got this messed up? Hold on, y'all. Nope. Yep, that's good. That all makes sense there. So that is your March 25th expiration, 185, 190 call credit spread. Risking 5% to make 20 or 30. So that's what that looks like here on the options chain. And bringing in some decent premium here thus far. But the goal is, it's like, hey, if we can, for the next 2 to 3 months here, trend to the downside, meaning we're going to flush, we're going to bounce, then we're going to roll over, take out the recent lows, make a new low, then bounce again, and just kind of rinse and repeat that process. What I'm looking for is these kinds of trades, whether it be a debit spread or a credit spread, but I'm looking for these trades where I can risk, let's look at this on the 11th, right, where I'm going to risk that 5-ish% of my account to potentially make 20 to 30%. And if we can catch this trend, because keep in mind, the market might go bullish again next week. So as soon as I stop getting sell signals and I start getting some buy signals, all right, then I'm going to look to probably get long. But the goal here is, hey, if we're going to trend lower for the next 2 to 3 to 4 months, not saying we're going to, but if we do, I'm looking to kind of double my account here. If I can risk 5% per trade, and I can structure these trades where, hey, if we're on the money, we're making 15, 20, 25+%, 5, 6 to 10 good trades here should result in some pretty good account growth. So I think on any bounce next week, we're looking to make that about a 10% position size. So again, for the sake of some easy math here, if you got a $100,000 account, well, on this given trade here, 140 contracts is a 10% risk to potentially make 30, 40, 50%. So that's what we're looking for here. Any bounce next week, we're going to try to add to that idea. And I think the QQQ, with an initial target of 320-ish, that's fair game as well. So I think the Qs are shortable, the S&P 500 is shortable, but certainly the IWM. And then in terms of shortening the individual stocks, I do think personally just shortening the indexes is easier. There's a lot of liquidity. You could work really good risk reward. But as goes the market, goes the stocks. So there will be that plate of opportunity to short some of the individual names. We did the live trading for my class last week, and we shorted Comcast. Shorted some Comcast here because we have sell signals. So I think next week, names like Comcast, another name here is Adobe. That certainly looks very shortable. We got names like Nike, names like Burlington Coat Factory. They've all got sell signals. They all have negatively stacked DMAs. Based on the current structure along with the indexes, these kind of look like they're going to have looks like the path of least resistance is going to continue to be lower. But I think the easier trade is just on the index. So if you want to simplify things, I think we're looking for a bounce next week, and I think we're looking for short entries for March, April, maybe May expiration. In the S&P, the QQQ, and definitely the IWM. One name I am interested in shorting, though, is actually Apple, because Apple's basically been your, relative strength-wise, it's outperformed the Amazons, the Facebooks, the Googles, the Microsofts. But if the QQQ is going to trade down to 320, and then I think ultimately start to trade lower than that, then I don't think Apple's going to rally into brand new all-time highs. So the target here for an Apple short would be about 140-ish. Big monthly squeeze, starts to run out of gas here. Just like everything else out there, kind of sets you up for a flush to your monthly 21. And then I think Tesla as well. I think Tesla over the next handful of weeks here could make its way down to about 700. But understand, this opinion of mine changes as soon as I lose my sell signals. So that's what I got for you guys this weekend. We are going into next week short the IWM, short Comcast, and in the options room we got some Devon calls that we're trying to flip here before earnings after the close on Tuesday. But that's what I got this week, guys. I got sell signals everywhere, indexes, sectors, scan results. It's all looking a little bit bearish. So until that changes, I'm looking to short bounces. And if we get that nice downtrend here for the next handful of months, my goal is try to double the account. So I'll keep you all posted on all of that. Enjoy the rest of your Sunday. For those of you in the mastery, we'll have a couple of extra live trading sessions this week because, well, it's looking like we're going to get busy. Probably going to be some opportunity to get some more exposure on. So I'll keep you guys posted in terms of additional trading sessions this week. And then for those of you who aren't in the options room or the mastery, I'll see you tomorrow morning for pre-market prep. But good stuff, guys. Enjoy the rest of your weekend. Talk to you soon.